Let's take a look at some charts on Tezos from this week's article on Brave New Coin. So Tezos is a proof of stake coin. Currently 80%, 80, is being staked of the circulating supply, which indicates to me that there's not much else to do with Tezos other than staking it or trading it. Something I mentioned in the conclusion of the article, which is a bit of an issue if you're looking to create some vibrant dApp community or dApp economy, DeFi stuff. Thus far, that is fairly non-existent for Tezos since the ICO. I think we're seeing some of that in the price. If we look at all of the coins with staking available, Tezos is kind of the middle of the road, middle of the pack. It benefits from a larger circulating supply and a larger price per coin as far as market cap is concerned. The transactions per day, to me, are most likely related to staking more than anything. It's hard to prove that with data, but I just can't imagine it's anything other than that. Daily active addresses have continued to increase in a stepwise fashion. I'll show that in a minute. Since the ICO, again, to me, this is more staking related than anything. Fees are actually pretty high as well on Tezos. The next upgrade that's coming should alleviate some of that fee pressure a little bit, but based on the transaction volume and transactions per day, fees I think are a little too high, and that's subjective. Like, what do I know, right? But just looking at it, if transactions per day increase 2-3-fold, daily fees are just going to skyrocket. So where Tezos sits in relation to other staking coins is actually a strong position, especially when you look at active addresses just rising nonstop. Dash's active addresses are most likely related to coin join, coin mixing, privacy initiatives, that sort of thing, and less related to staking, consensus, organic activity. They did have an all-time high in masternodes recently, which will undoubtedly play a role in active addresses, but Dash's active addresses are quite high. What's not on here is EOS. EOS is a free chain, as is Tron. Notice no fees here for Tron. So it's hard to compare the feeless chains to the chains with fees, because if you can send anything for free, then it just skews all of the data. Tron's transactions per day are infinity, basically, which is why I left them off of here. EOS the same way. It's in the multi-millions, and it's not really fair to compare those two to each other, to other staking coins. If we look at the total value being staked for Tezos, it is the third or fourth coin by notional value, up there with EOS, ADA, DOT, Atom, Algo, AVAX, one of the newer ones, Dash right there. Staking's in a bit of a weird mix of old trash coins, zombie coins, a bunch of super new coins, a bunch of coins that have migrated, like ADA, to proof of stake. I actually think NEM is migrating out of proof of stake. DOT is very new. Atom Algo, fairly new as well. AVAX, very new. So I still think until ETH is proof of stake, in general, proof of stake coins haven't really had their day in the sunshine yet. Price can go up and down, but proof of stake coins haven't done much historically. So as a non-proof of stake believer, I would really like to see a proof of stake coin do something meaningful. ETH might be the coin that does that, but it'll be a while before ETH is fully proof of stake. We take a look on how much Tezos is held on exchange bakeries. It's about 23% of the total circulating supply. And anytime we talk about proof of stake, proof of work, it's always good to look at how centralized are the consensus mechanisms or the validators of the network, the miners, that sort of thing. If 23% of the Tezos is held on exchange bakeries and there's a dispute, a governance issue, where exchanges take one side, communities take another, then the exchanges will have a very large foothold on the total vote, should they use their voting power in their best interest. This isn't stopping users from removing their tokens from the exchange, but it's always something to consider. And we can look at validators and say the same thing. If there's millions of Tezos in Happy Tezos Validator and they vote against your best interest, you have to move your coins out of there to decrease their voting power. If you don't, you're giving your voting rights to them, basically. Somewhat of a representative democracy where you can quickly move coins around. But to me, the network looks much more decentralized if most of the Tezos is sitting on random validators, which are located all over the world, rather than mostly Coinbase, Kraken, and Binance. Binance has a history of voting against the community during a governance dispute, specifically with Steemit. You can look that one up. That's a fun story. So this stuff can and will happen. It's only a matter of time before something happens where the exchanges disagree with the vote, and there's going to be an interesting schism in what happens with these coins on the exchanges. I will say, as a person who stakes their own Tezos on Kraken, it's very convenient to do so, which is the main reason why most people do it, I believe. And if you look at all the validators, mytezosbaker.com, you can see how much each has capacity available, staking yield, fees, all that sort of stuff. All this plays a role in basically the power of the individual validators. So red here means that they actually need to buy more Tezos to increase their staking bond. Okex, which isn't on here, but Okex actually has to buy 10,000 Tezos to increase their staking bond so they get full proof of stake rewards. Currently, in the past month or two, they haven't been receiving full rewards because their bond is not greater than the balance. If you look at some on-chain stuff, I was looking at the transactions last night and I thought there might have been an error here, but looking at the past spikes down in transaction counts, this may or may not quickly spike back up as it did a few times here. I don't really know if this is like a validator issue that goes offline. I don't know enough about Tezos to really comment on that, but seeing that decline like that is definitely not bullish. So it hit a multi-month low on transactions per day. Fees are still rather quite high despite transactions coming all the way down here. This may have to do with the individual validators and fee rewards, staking rewards sent to all the people being a part of that validator. I'm not really sure, but the last thing you want from a proof of stake network is fees eating away at your rewards, which are less than 1% as it is per year. So clearly there was an uptick from 2019 to 2020 in transactions per day. Price followed. Thus far, since January, February, there's been a dramatic downtick in transactions per day, and prices followed. Not really rocket science there, but looking at this on-chain stuff can help influence trading decisions and say, all right, well, is it a good time to get super long on Tezos if the trend is clearly bearish on transactions per day? Probably not. Looking at active addresses, which are continuing to push all-time highs, and 30-day NVT. It's the 90-day moving average over a 30-day period. I like to go like zoomed way out as I can on NVT because otherwise it just gets way too noisy. This is hitting all-time lows, or was hitting all-time lows in October. Still cruising at all-time lows. I think overall, this picture specifically is bullish. You know, way more bullish than watching the transactions per day drop down. So this does give me hope that Tezos will come out of this somewhat to the upside because active addresses continue to increase. And again, most of these are probably just proof of stake, non-economic nodes, as someone would say. But there's no real like organic traffic activity here that I can see other than proof of stake validation. So all of that is playing a factor in the NVT declining here. If we look at Google Trends, just mediocre, like most of crypto. There isn't anything that's really popping up right now. You can see again, earlier this year, we had these big spikes in Google Trends, and that correlated pretty nicely with price. All right, let's take a look at some technicals. We have the 50 and 200 EMA here, VPVR, yearly pivots, RSI, volume, and Bitfinex open interest. Bitfinex open interest is probably the least important thing here because historically it's kind of been all over the place, just mega long, no short activity. Right now there's virtually no shorts at all. When longs were at all-time high, that was basically the top. Something you can and will see pretty often. Most people are terrible traders, so there's a general opposite sentiment that you should carry when open interest is at all-time highs. And right now it's about 97% long, so that's kind of scary. For the long side, most of these longs have been long from slightly higher or somewhere around 220, something like that. If you look at VPVR, you can treat it as support resist levels. So there's all these little notches in the ladder here that'll help you see support resistance. Currently sitting on a support around 214. $2 is a big psychological support. It's a yearly pivot here. If $2 does not hold, it's headed for 130. That's fairly certain based on VPVR here. This is the previous all-time high zone as well, at least for this chart on this exchange, around 130, 150, something like that. So it wouldn't surprise me if it dips down to that level, considering the 5200 cross is bearish. Alternatively, there could be a forming inverted head and shoulders where you get a shoulder, head, another shoulder, and the neckline's at around 230, basically the 200-day moving average, and then you get a move back up to $293. There is a bullish divergence here, which I've highlighted, higher low in RSI, lower low in price. So there is a bit of a waning bearish momentum, and Tezos has vastly underperformed pretty much anything right now. ETH, BTC, especially. I'm going to show the BTC chart in a second, but man, it is bleak on the BTC pair. Looking at the cloud, again, it's very bearish, but you always have to be careful because with the cloud, it's all about entries and exits. So is this looking like a short entry to me here? No. Is the trend bearish? Yes. For a short entry, I would want to see a TK cross, a bullish TK cross, followed by a bearish TK recross below the cloud to indicate a short entry signal. Right now, it's leaning towards this will probably cross bullish, the TK cross, which is a short close signal, and then it may hit this edge-to-edge trade, another cloud-specific thing, where if it moves through one edge of the cloud resistance, it'll hit the other edge of the cloud. This would follow along with the inverted head and shoulders possibility, and for edge-to-edge trades on the cloud, there's typically some sort of chart pattern that tips that off. So it's early, it's going to take all of December to figure this out, but I can see rotation into Tezos throughout December as BTC just pummels it unbelievably hard. Again, we have VPVR 5200, open interest on Bitfinex, yearly pivots, RSI. It's down 70% plus maybe from the high here. You can see it had this massive range and just failed to break higher. And ever since then, it's just been nothing but punishment. It's failed to hold on any supports here. The 5200 cross bearish. This is kind of the last support here at 10K sats. And in 2019, I really liked this zone as a support level. So it wouldn't surprise me if Tezos is able to establish something here as far as support is concerned around the 10K sat level. There's a bit of a bullish divergence here as well. But wow, it looks so oversold, deceptively almost, because RSI is kind of just, it's not even signaling mega oversold, but it's really, like I said, it hasn't followed BTC at all, it hasn't followed ETH, it hasn't followed anything in the high cap realm to redeem it in any way. So it wouldn't surprise me, not that Tezos is mega bullish, but it wouldn't surprise me that this starts to see some bullish momentum just simply because of the rotation play. So overall, Tezos still doesn't really have much going for it. The Tezos back splits are going to rake me over the coals for that, but that's just what I see. On-chain stuff, I think, is deceptively bullish because most of it's just staking related. Technicals are mega bearish, but they may roll over into December as we get some rotation from high cap coins, which have moved extremely well to the upside, into other high cap coins which haven't, like Tezos.